Traders Raghi here, and in today's free video I want to talk a bit about the dollar, Dow, and the crude oil market, and I'm going to show you a couple other ways that I'm trading this. Now before you think, hey, wait a minute, where are the forex pairs? I want you to realize that a lot of what I'm looking at in the dollar affect all my dollar correlated majors. A lot of what I'm looking at in the Dow affects not only the risk appetite but any kind of a yen position like the dollar yen that I'm watching. And crude oil affects not only my positions in crude, OIH, but also what's happening with the Canadian dollar itself. So realize that even when I wander into these Forextra futures, there is application back to the currencies setups. So let's start off with the US dollar. Now, obviously the short squeeze that we got, I think two reasons this was so tough is because it really happened out of the blue. Many of the reasons that were cited for the move, I addressed this in the morning chat, but one of the things that I was watching was ultimately, one, do we get a retracement to the 20-period simple moving average or some sort of correction that would then be support that would justify long positions against the euro, the pound, the New Zealand dollar, the Australian dollar, the Canadian dollar, and maybe even the yen. Okay, and do I really want to buy dollars themselves, which I am long the dollar index at this point from the two levels you see right on my chart. So what I find interesting about all the reasons cited for that pullback, and they weren't all available during the 8 a.m. Eastern Tuesday sell-off in the dollar. Contra Lakota was quoted and cited often, yet he is one of the most dovish doves in the FOMC. And he's actually not looking to be to re-up his membership, so to speak, in the FOMC next year. He is a voting member, but what I find even more interesting is this is old news because Contra Lakota has been on this campaign about the dangers of hiking rates since you can find headlines and quotes dating back to literally a month back. So why now? Why now is this the reason? It's not. Okay, what else? Crude oil was cited, but crude oil's been bouncing now for a number of days. Why that day suddenly crude oil crossed some sort of threshold that says to the market it's risk on? Now, I believe it was risk on for another reason, and crude had nothing to do with it. We can actually look at the Dow and the overall movement to the range extremes in the Dow. So take a look. 1, 2, 3 days higher. Why yesterday is the day? In fact, yesterday was the day I sold crude oil. And by the way, what are related crude oil shorts? Look at OIH. Look at some of the stocks within the OIH like Schlumberger. But here's why I believe there was risk on. We actually wandered down into the range extremes between 16,980 and 17,000. That's basically within the context of this chop. This is an oversold floor. Okay, we only talk about oversold and overbought within the context of a sideways chop. We basically reached an oversold floor, which is just a fancy way of saying it was support. So traders that were looking at dollar yen yesterday saying, wait a minute, the dollar is tanking. Why isn't the dollar yen moving lower like all the other pairs that were moving based on dollar weakness? Because the yen too was weak as the Dow rallied 300 points. So we had a foot race of weakness. US dollar weakness in that short squeeze, and yen weakness with the risk on and the Dow strength. Okay, so what else do we have? I mentioned a number of reasons why I felt that this was just a price action squeeze move. The Dow had been fairly quiet and sideways. In fact, here we have an inside day. Actually, no, here we have an inside day. There was yesterday almost an inside day, and then there's a sell-off. So yes, you can argue that the 95 resistance was a ceiling, but the ceiling in and of itself is not what is a catalyst for necessarily bearish momentum. The ceiling invites top pickers, and the top pickers create selling pressure. Selling pressure intraday could then entice some scalpers and momentum players for the session to sell. If they cross certain thresholds and that selling builds momentum, then you can look at it as systems and algos getting involved, and then the acceleration begins, and then people notice it, and then it feeds right back on itself. More scalpers, more bearish momentum players, and again, it just keeps feeding and feeding on itself until you're in a full-on dollar short squeeze, which again, later, after the fact, you started hearing things like, oh, the non-farm payroll, some sort of fear for non-farm payroll was factored in, and therefore traders were pricing in a disappointment on Friday, which I do believe is partly true. But all that only comes when the dollar starts to weaken. So I believe the price action preceded any kind of reason. It wasn't any kind of good data out of Europe, because that would have initiated a sell-off much earlier, about 5 hours earlier in the day. And it happened very much with the North American session. So, when you look at the way in which the market sold off, and you look at the way in which it corrected, one of the worst things I started hearing, not only with crude oil, but with the dollar, was the R word, reversal. When you take a look at the way trends are gauged, it's typically a daily time frame. Daily time frames are the most psychologically significant. So when you look at the move higher in crude or the move lower in the dollar, those really were retracements of the larger, most psychologically relevant trend. So crude oil rallying into, these previous highs and pressuring, yes, the validity of the trade, but still being a solid short, not only CL, but OIH, as I mentioned before. The dollar pullback, here's the DX, and you can also look at the UUP. For those of you that like trading ETFs, you can even look at UUP. All right, these are all related currency stories. Don't think currency trading begins and ends with Forex. Okay, these are all related currency stories that affected many of our pairs, and our current entries in pound US, US dollar Canada, euro US, pending orders and even live orders in New Zealand dollar, US dollar, pending orders in Aussie US. I mean, it affects everything. The fact that we sunk down to the 20-period simple moving average, which, yes, while it is a technical indicator, is very much a technical indicator that transcends technical analysis. Traders who would not define themselves as being technicians will say, yeah, I know what the 20-period simple moving average is on a daily, or even the 50, or even the most psychologically significant, the 200. Traders know where these levels are. They transcend mere technical analysis and become psychologically significant. So selling off into that level, finding that as the safety net here, kind of to catch the fall, was, I think, extremely significant. Holding support above 93, I think, was another big part of this, because we went all the way down to 93.38. Okay, and a lot of traders know while this was happening, gosh, this feels like a rope-a-dope. I know this is a short squeeze, but here's the thing. We don't ultimately know when it's going to end. So waiting for the dollar to reach support and waiting for those daily time frames, and this is where the daily gets so important, waiting for those daily time frames to reach their respective entries, coordinating with the dollar pullback was very important, like the 15.30 short on the Euro US that we took. Like the New Zealand dollar, US dollar, a little aggressive, but the 74.20 short. Okay, even the US dollar, Canadian dollar, the pullback into, as you can see there, the 1.2405 level. Those were all levels that we waited for the dollar to reach support, and then we waited for these respective setups to also become valid. Of course, shorter term time frames like the 240 would not have necessarily been on the books had this been, say, in front of the MPC or in front of non-farm payroll, okay, because they don't have the shock absorption. But the fact that this sell-off came with really no scheduled economic data, I think, is what made this so much worse. Traders didn't know why the market was selling off. They just knew they were. And when we don't have a why, that uncertainty just creates a panic. So this was very much a psychological move, because when traders looked at the economic calendar yesterday, they're thinking to themselves, what's going on that I don't know? I was no different. What's going on that I don't know? And therefore, what I don't know certainly can hurt me. You look at it in hindsight and say, gosh, it's so easy. But when you're in the middle of it, it is terribly difficult. But again, the only way that you can deal with it is to bring some confidence and some analysis and some strategy. And while you have to respect your stops, you also have to be present. You have to show up and say to yourself, all right, what's my next set of opportunities? If this is a short squeeze without any reason, but yet I'm reaching support levels on longer term time frames which give me a better cushion, maybe this squeeze is exactly what I need to get the fill that I want. So today we're taking profits on US dollar, Canadian dollar. We're taking profits on the euro pound. We're taking profits on a number of those pairs that either triggered yesterday or were kind of dormant or taking some heat yesterday. And on the other side of that squeeze, we're finding by showing up, by staying present, here we are with opportunities that we may not have had minus the short squeeze. Okay, so think about that short squeeze and then ask yourself, did I have a plan for when it might happen? We were thinking the short squeeze might happen with the ECB. Didn't happen. It happened on a random Tuesday with no data. And sometimes that's the frustrating part. But again, if you know what your setups are, even longer term, you just don't always know what's going to trigger them. And that's my take on the short squeeze. All right, traders, have a great day.